Well, hello again, Solis Wealth family. Greg Solis here with the update. First of all, Happy New Year. I hope you had a great holiday season. I hope you have a great 2024. Hope you set some goals, got clarity of the vision going into 2024. I know we have, and certainly been thinking a lot about 2023, what we learned, and how we could grow moving forward in 2024. So I hope you and your family had a great holiday season. We did. I had all the kids in town. It was amazing. Jack was even in town for a week, which was great, from Christmas through the New Year. And Nicole was in town. She, of course, is heading back to Hawaii in the next week. And then Emily will be here till the 15th of January. So we get her for a little longer. But we've had a great time together, and it's been just amazing. Market-wise, wow, what an incredible year 2023 turned out to be. Incredibly volatile. At some points, it seemed like we were going to have another bear market after a rough 2022. It felt like 2023 was not going to be much better. And then, of course, as we got into the summer, we kind of hit some highs. That was nice. We thought things were better. And then August, September, October were horrible. And then November and December turned out to be great months. It was amazing to see the S&P 500 actually go up about 15% in 2 months. That's crazy. That was a big move to finish the year strong. So 2023 ended up being pretty good. Bond market was relatively flat. We did okay, but interest rates continued to go up. And so we had some headwinds in the bond market. But the good news is we saw interest rates come down a bit in November and December. That helped the bond market in these last couple of months. And we still got a pretty good yield in bonds. So the 10-year treasuries right hanging around 4% after being as high as 5%. So it's kind of leveled out there. So we like the bond market going into 2024 with these higher yields. We feel we're able to lock in some good yields going forward. And it looks like the Fed will start lowering rates. Most are predicting that by March, we might see the first rate decrease, which would be good for both the bond market and the equity market. So we're liking to lock in some of those yields on bonds right now. And we think the valuation in equities might be okay. Definitely going to see things slow down in the economy. We should see the gross domestic product slow down a bit. So we got to watch valuations and watch that growth that will continue to be there in the economy, which will be reflected in earnings in corporate America. But we feel pretty optimistic that we think 2024, we should see some growth in the equity markets and we should get nice yields on the bonds. So overall, 2023 ended up being pretty good. I think we're positioned quite nicely for 2024, but it shows. Hang in with the plan. We don't want to miss the good markets when they roll around. November, December taught us a lot about how important it is to hang in there. It seemed pretty bleak, of course, towards the end of the summer, but then, of course, we got a nice run up, and it was good to see. So we finished pretty strong. With that, I hope you have a great 2024. My very best to you and your family. Look forward to seeing y'all real soon. Take care and God bless.